Hey, it's Lon Welsh at Your Castle Real Estate. I've got my guest star, Joe Massey at Castle and Cooke Lending. And I'd like to explore a little bit what the impact is of mortgage rates going up and down with a $2,500 payment, which would be comfortable for a typical buyer. Joe, what have you seen in the trend in the market lately?
Yeah, such a great question, Lon. And I love this chart that comes from the Daily Shot. These guys put really, really great data out. And what you see with this average $2,500 monthly payment, assuming a 20% down payment, if you go back to the early 2000s, you could afford about a $550,000 home. Well, as interest rates decreased, we saw that price go up. So earlier in 2020, during the COVID unicorn years, you could buy a property for as much as $758,000 purchase price and have that $2,500 monthly payment. But what happened as we started to exit the pandemic? You saw interest rates go up and purchasing power went down dramatically. So now we're at a point that roughly $454,000 purchase price equates to that $2,500 monthly payment. Now, how does this translate in real conversations to clients? We're having to spend a lot of time setting expectations because people might have looked for homes 2-3 years ago. They said, boy, I really like this $700,000 home. I really love this $2,500 payment. Now we're having to have realistic conversations and say, you know what? That $2,500 payment is maybe a $450,000 home, or maybe a $400,000 home, or maybe you need to put a little bit more money down. And so we're really having to adjust buyers' expectations. We're having to adjust real estate agents' expectations. We're having to adjust those conversations about what is the reality of interest rates and the current environment for prices, taxes, homeowners insurance. These things add up and impact a buyer's purchasing power. But I still think it's a great time to buy because I think we're going to see interest rates begin to improve and this chart start to go back like that. That is going to drive up
Yes,
prices and bring new opportunities into the market. What do you think, Lon?
absolutely. We've already seen it actually. This is mid-December as we're recording this, and the interest rates about 6 weeks ago hit a peak at about 8%. And now today they're at what, 6.8%, Joe?
Yeah, 6.8, 6.7 on any given day.
And just a couple of weeks of this lower interest rate, we're already seeing that the number of contracts that our team is writing has increased. So the buyers are already taking advantage of the new market.
Yeah, I think you're exactly right. I think spring of 2024 is going to be a very busy time for buyers and sellers. So it might be good for buyers to get off the fence right now before that spring rush.
Exactly.
If you guys have questions, put a comment down below, reach out to Lon, reach out to myself. We'd always be happy to chat.